Hey everybody, welcome to today's session. In today's session, we're going to be doing something a little bit different than the everyday norms. So we are going to be back testing live, obviously. One specific pair for today, it will be Eurusd. We'll be back testing it for the past 3 months and see what we could have done better to trade in this low volume market, and also learn from our mistakes, learn from the way the market moves, so that next time we are in a low volume market as such, we can actually trade better and avoid the mistakes that maybe we did or we didn't know that would actually harm us. So with that being said, we're going to start back testing the past 3 months. But before we do that, we're going to be looking at, these are the stats for the past 3 months. For the past 3 months, the Euro USD pair, we had 13 trading opportunities. We had 13 trading opportunities. 4 of them hit SL, 3 went break even, and 6 of them we closed in profits. That giving us a total of 17.5 R in profits, obviously 0 break even, and negative 4 R in stop loss, with a net total of 13.5 R in profits. So that gives us a 69% win rate. So the win rate is good, but for instance, most of the trades that we took on August, we had only 3 trades in August. 2 of them were stop losses and 1 was break even. And August has been the worst month for us this amongst these 3 months. So we would have had a better winning rate, but we can't avoid the losses in the market. So yeah, we had 4 losses, 3 break evens, and 6 trades that we closed in profit. So it's not a bad win rate, but let's see what we can improve. Let's see if we could have taken other trades, and maybe if we could avoid these losses and improve on our trading. So we're going to start off. Obviously, as we know, the back test is always, so let me remove everything. As we know, we are going to do back testing for the past 3 months. So we are going to start as if we know nothing from the past 3 months. So we are going to do a bar replay. We're going to cut until the first right here, and then start trading as if these are the market conditions that we have right now. So this was the candle that closed in May. It was a solid bearish candlestick. So when you look at these candlestick characteristics here, or the chart characteristics, we will notice that prices were in a downtrend, right? Prices were in a downtrend. As we had a high, we had a low, we had a lower high, lower low, lower high, lower lows, and prices gave us this solid bearish engulfing candlestick. So this was an indication that prices have a high probability to keep on pushing lower, right? So I was considering, I believe, to be taking bearish trades in June with that candlestick closure. So if we threw in a Fibonacci in there, okay, the 0.5 didn't really match it. If we did the 0.6, it went above that. So the Fibonacci didn't even align with this, with any of this. So okay, we had that market structure. The bigger trend is that we understand prices have a high probability of pushing lower. So we might throw in a couple of additional analysis in here. So prices did break out of this structure. We had this as the market structure, the monthly market structure. So prices were rejected first, and then prices came back again, and then got rejected again. So obviously prices were in this kind of resistance structure from the monthly perspective. I would have been anticipating to see prices, push lower. Now, let's go on the lower time frames and see how these prices will actually play out. Okay, so here we are on the monthly perspective. So we can actually go on the weekly. Okay, so on the monthly, we see as if prices are having a very strong bearish momentum, but here on the weekly we can see the bearish momentum is kind of thinning, right? Because the previous week was actually closed with a doji, and if you look at the trend, prices had a low, prices had a high, higher low, higher high, and then prices are now looking as if they are having a low momentum, and they're trying to create a higher low. So the trend on the weekly is bullish, but on the monthly it was a clear bearish, right? So right now I wouldn't have taken a trade here, or I shouldn't have considered taking a trade here until I see what or which momentum actually wins this. Is it the bulls or the bears? Because currently it was actually a low volume market, right? Now let's see how it goes on the daily perspective. On the daily perspective, we had this trend line here, and that's market structure. So I will be anticipating a bearish continuation should prices break below these structures, or once they reach here, obviously I'll be looking for some kind of a bullish trade. So let's see how it plays out. Okay, so prices have just created this kind of a bullish momentum, bearish, an inside candle, and then another doji. That's 3 days in. Okay, so we have that. Prices are now pushing higher. Okay, the trend started pushing higher here. Okay, so let me do a quick bar replay again. So remember, this is from the daily perspective. From the weekly perspective, once we switch to the weekly perspective, we can see the bulls are actually the ones that are taking control, right? So that means prices came here, lost momentum, and then created that kind of a bullish candlestick. So that would have been an indication that prices are now turning bullish. So that means on the lower time frames, such as the daily, we should have been looking for some kind of a bullish or a bullish trade, right? So using our edge, obviously we would have been waiting to see some kind of a break of a market structure, which I believe somewhere here. So maybe if we look in the 4 hours. Okay, so let's zoom out. So should prices break above that, we should be looking for entry candlesticks. Obviously we do use a break and retest. So looks like prices are being rejected from there. Prices are trying to push higher. They've bounced off this structure here. Okay, they've broken above. Let me pause. You can see prices have broken above this structure here, came back, but have not yet closed below this bullish candlestick. So in your trading, when you're looking at possible trading opportunities based off the momentum, for instance, here you see the structure is now bullish, right? And the bullish candlestick, that's the anchor candlestick, is this one right here. So that means if you're looking to take buys, this bullish candlestick shouldn't be violated. If bearish candlesticks close below this bullish candlestick, that means the bears are now having more momentum than the bulls. But you can see here, as the bears tried to push lower, they were rejected. This one tried to push lower, it was rejected. And they all closed above this candlestick, right? Okay. Oof, you see this oh, what I paused it, right? Okay. So you see this candlestick right here. How it actually pushed all the way down here below this, lower than that bullish candlestick, but then was rejected. Look at how it's evolving. You see that? And then it was rejected back up. Like, that's the type of momentum that you want to see. That's the type of momentum that you want to see, because it indicates there is a very strong, or there's a very sensitive area down here that prices aren't allowed to close bearish. Like, the bulls are so strong in this area that the bears aren't allowed to close bearish in here, right? So obviously I would have been using this one as my confirmation candlestick. So I always use, in my analysis, I use my 4 hours for confirmations, and then I use the 1 hour for entries. So that means I already had my confirmation in there. I would have come to the lower time frames, the 1 hour, to look for my entry. Okay, so this, I believe, is where the 4 hour candle was rejected. So prices, you can see they came back down here and then were rejected. And I think they closed somewhere up here. So after prices pushed that high, so after prices closed first here, let's see, what time was this? So this was about 8. It formed 8. This one was 12. So that means it was about 11. Yeah, this candlestick right here. So this candlestick right here, that's what we would have been using as our entry. As you can see, it has also broken above this structure here and closed above this high. So our entry would have been here, stops would have been below here, or should have been, because this is actually past data. I'm long. Where would I have been aiming for? Most of the times I always use my Fibonacci extension. So for instance, here on the 4 hours, the structure started here, gave us that, and then here. So my target would have been aiming at this one right here. So I think I would have forced it to be 3. So I would have been aiming for 1. I always exit at 1. For those that actually know how I trade, they actually know I exit at 1, because once prices reach at 1, they look for, prices always retrace all the way back to 0.618 before extending all the way back to 1.618. So I always advise people to exit their trades at 1. So that means if we took our entry here, we always need to be break even once prices reach 1:1. So we would have been risking about 17 pips. So once prices reached somewhere here, okay, 18 pips, we should have been break even. So that means this is how it would have been playing out. If that was the entry candlestick, we should have been looking to go break even once prices reach here, and we should have been looking to exit the trade once it reaches there. And guys, if you want to take a trade and you're looking to take the trade and it doesn't give you a reasonable risk to reward, or once prices reach at 1, it doesn't give you a reasonable risk to reward, just exit. Like, don't take the trade, because if it doesn't give you a reasonable risk to reward ratio, it's not worth it. There'll always be multiple trading opportunities in the future. So this one right here should have been a good buy trade. So prices started going bearish and then closed bullish. So and by the way, did you see this candle started being bearish and then closed back here bullish? So some people actually always just are moved by emotions in the market. So when they see prices, they took a trade and then it starts going bearish, they panic and close the trade. Never be that person. Believe in your analysis. Plus, always wait for the candlestick to close and see where it has closed. So if you close this candle while it was bearish and then it closed bullish, I think you would have been looking at yourself funny, right? You would have been even angry with yourself, right? Because you actually just reacted out of what the market is doing. But you always need to wait and see how the candle closes. So right here, this candle closed bullish, so we would have still had hope like prices will keep on being bullish. They had a low momentum though. Crazy momentum kicked in. Crazy bullish momentum kicked in at around New York open. So prices were ranging here, obviously, because it was the pre-New York, not a lot of volume. But then when the New York kicked in, you can see the momentum kicking, right? That's the volume session in New York. Prices kicked in with a strong momentum. We would have been break even once prices reached here. And then we would be holding until prices reach somewhere there. Obviously, given the current momentum, I wouldn't have been worried if the prices will actually hit take profit. And then prices just sniped take profit, and looks like it might keep on being bullish. But we would have been exiting the market at 3R or once prices reached at 1 here. So another way that I always manage my trades is that once prices reach 3R, I look at the market momentum. Does the market still have momentum? If the market has momentum, I can continue to hold that trade. But if it reaches 3R or 1 extension and the momentum is a little bit weak, I don't really take that trade. I don't really hold it. I'm just like, okay, I just made 3R. I need to close this trade. So that's how I always view it. In this particular scenario, I might have continued to hold, but let me see first. This trade was on Wednesday, 14th June. It looks like we didn't take this trade. So the trade that we took was on June 13th, and we closed it at 3R, at 4R. And then on 15th, again, we took another trade. So let's look at these two trades of 13th and 15th. So right now we are already on 14th. So let's look at 13th. Which trade did we take? So this trade, we didn't take it. I'm not sure why I didn't take this trade, because it was a beautiful trading opportunity. Everything aligned perfectly. Like, it was a beautiful opportunity. I don't know why I didn't take this trade. But obviously we did take a trade on June 13th. Let's see how it played out and see what we actually got from it. So let me look at the data here and see where we took the trade on June 13th. Okay, so I want us to continue, like, we are back testing, but we are also looking at the trades that we took, if we could have managed them better, or if we could have, I don't know, traded them better, if you will, right? So June 13th. June 13th. Okay, so here we are. On June 13th, we took a trade. Okay. So we actually, let me show you where we took the trade. So we actually took a trade somewhere here. You see this June 13th? So we actually took a trade there. It was a long position. And then we took it on the 2 hours. We took it on the 2 hours. About 11. So let me switch back to 1 hour and show you where we placed the trade. So it was somewhere here. The trade that we took, the entry price was 107738. Profits were, we are aiming for a very high target. Like, we are aiming for 10089. And stops were about 7411. It was June 12th, not 13th. So my bad. It was June 12th, not 13th. Okay. So this was the entry that we took. So we took the entry while prices broke and retested this zone here. Right? So prices broke above that, retested this. We used this bullish candlestick as our entry. Our stop loss was just below this entry candlestick. But what we didn't really anticipate was that prices, or what we didn't really, I may say, what we didn't really pay attention to was that prices were approaching a resistance structure. As you can see here, there was a resistance structure, but we still pulled the trigger. Now, it's very risky to take a trade or a buy trade while there is a resistance structure here. So this was an aggressive trade. Yes, prices did break above a structure and gave us a retest, but still prices were on another market structure. So us taking this trade was very risky and we shouldn't have taken the trade. Obviously you can see once prices, we took the trade, prices started retracing, almost stopping us, but eventually it turned around and kept on pushing bullish. This trade, we were risking about 35 and prices did go 1 hour in our direction. As you can see here, it was about 38 pips once it was here. So we were break even, and then prices came back, and you can see here they actually just tapped our break even and then took off. So what can I learn from this trade here is that we were very aggressive on this trade. We shouldn't have taken the trade while it was here. We should have waited for this major structure to be broken, and then we would have gotten this beautiful trade here, which would have possibly given us 3R and even more if we actually held it. So I think the reason I didn't take this trade was because I was still holding this trade. Once I got stopped out, this other opportunity was presented. So you can see this previous candle was the one that wicked us out, and then the following candle was the entry candlestick for this scenario. So I think the reason I didn't take this trade was because after I take a loss, I don't really want to look, or I don't really want to just jump into another trade. I want to sit back, relax, and then wait for another trading session before I take a session and before I take a trade. So we were stopped here at London, and then another opportunity was presented. I was waiting for New York to look for other trading opportunities, and then that's why we missed this trade. So I think that's the reason why we didn't take this short. And the way I'm doing that is to always manage my emotions. Obviously, everybody has different ways to manage their emotions in the market. You need to find yours and stick by it. Mine is that after I take a loss, maybe if I take a loss in London, I'm not going to trade the rest of London. I'll just wait for New York and look for another trading opportunity. Sometimes we may miss trading opportunities like this one right here. I understand that. But here's the thing. In the market, there are multiple, like there's an abundance of opportunities in the market. So I don't believe like we'll never find another trading opportunity. I know somewhere around the corner we'll find another trading opportunity. So I'm not even worried, right? And that's the reason why even after losing this trading opportunity, we got another trading opportunity. Like with this one was happened on the 12th, we got stopped out on 13th, and then this trading opportunity presented itself on the 13th. We missed it, obviously for obvious reasons. And then on the 14th, there was another trading opportunity. And I think this one we actually took advantage of. Okay, so this was the 14th. So we are still on the, this is the 14th, exactly. So on the 14th, this is the 30 minutes. On the 30 minutes, we took a trading opportunity. We took advantage of a trading opportunity on the 14th, where there was this crazy bullish run. on the 30-minute, we saw this break and retest. After that, we actually called a short. So this trade was taken on the 14th, on the 30 minutes, in about, the stop loss was the entry price was 179.74. Targets 89.19, and stops were about 78.45. So this was our entry candlestick. You can see the stop loss was just below the entry candlestick, entry right there. And then this trade actually just pumped in our direction. So obviously we would have been break even once prices reached 1 hour. As I always say, in trading, your primary objective is to protect your capital. Making money is secondary. So once prices reached 1 hour, somewhere here, we went break even, moving stops to break even. And then this trade here, we closed fully once it reached 4 hour. So we exited at about 108.55, somewhere 555, somewhere here. So once prices reached 108.555, we actually just took the whole bunch and left the trade. So we closed the trade fully at 4 hour without it reaching fully the take profit. So some of the reasons why I always do this is because when managing a trade, as I always say, once you take a trade, before you take the trade, you're a risk manager. After you take the trade, you're a trade manager. So that means you can see here, the reason I closed this trade was because prices were approaching some kind of resistance structure up here. So that means we had a possibility for prices to start reversing, right? There is always that possibility in the market. Once prices reach a resistance, there's a possibility for prices to start reversing. And for us to maximize our gains in the market, we just need to close the profits at 3 hour. But here we already had 4 hour. So that means we are past our target. So I was like, okay, we already passed 3 hour. We have 4 hour in our hands. What's the reason for us to risk losing this beautiful move? So I was like, fully close the trade at 4 hour. Everybody close the trade, close the trade, close the trade. And we exited the trade at 4 hour. But let's see how it kept on playing. Did it reach the target? So you can see it did kind of lose momentum there. Okay, it didn't stop us though. So if the person was holding and stops were still at break even, the person would still be in the trade. Did the trade stop us, or did it go to take profit? But you see the importance of having a trade management tool. Like imagine you have 4 hour and right now prices are just dancing at about 1 hour. How would you be feeling? So always look at the past data and then look and see our prices are approaching some. Oh, hold on. Okay, so if we even held, all the targets would have been hit. But at the end of the day, proper trade management, we closed at 4 hour while we still had a good momentum. This was actually in a very big risk of being stopped out at break even. In some of the trades, if you hold after they reach a resistance like that, there is a very high possibility prices will just push all the way until break even and you will be stopped out. Crying. JJ, why are you crying? Stop playing, brother. So that's the reason proper trade management is always good and it's always key for your analysis, right? And plus, once prices retrace, you can always find another trading opportunity. Like for instance, here I see on the June on the June of 15th, we actually took another trade, Euro USD. June 15th, we actually took another trade. So we took the trade on, okay, so this time we took it in the 15-minute. The entry was on the 15-minute. It was 1600 hours my time. So June 15th, 1600 hours. $1,600. Okay, somewhere here. Okay. So prices, we had seen prices had broken above this structure here. And then I drew some kind of a trend line. And then I took the trade once prices retested here. So obviously, as I told you in the beginning of the session, I'm a break and retest trader. So you can see here prices did break above this structure, gave us a retest, a one candle retest. Obviously, it's a very high momentum market. As you can see, prices are very steep. So once you see prices are steep, you need to understand like there's high volume in this market. You don't want to miss that, right? So I took advantage of this volume and actually took a trade here. June was beautiful. You can see all this volume. June was beautiful. So I took my buy with my stops somewhere here. I was aiming for 109.9934. 9934. So I was aiming for all the way up here. Somewhere there. That's what I was aiming for. And then prices started to take off. We went break even, obviously, once prices reached 1 hour. As I told you, primary concern as a trader is to always go break even to protect your investment. So we were risking 16 pips. Obviously, once it reached somewhere here, we were at break even, and then we let it ride. So once prices reached 2 hour at about 30, how many pips? 33, 34, 35, somewhere here. I told the people to fully close the trade at 2 hour. So this trade, we did close at 2 hour. We didn't hold it all the way until take profit again. And that's just trade management. As I just told you, I manage my trades different. I don't want to just keep on holding. Obviously here you see it was the end of the London session. And let's see if it was actually aligning with any kind of structure back here. So I always look if it has any structure back there that's indicating we might be reversing. So you see, we had a structure there. So these are just some of the things that I always look at. So I told the people to go break even right there while prices were at 2 hour, and then we fully closed the trade. So out of this move, we made 4 hour the past day, and then we made 2 hour this day. So we had a total of 6 hour in just 2 days. And then you can see how prices were reacting. I think they also hit take profit on this trade. Did they hit? Let's see. But it had a crazy bullish, beautiful bullish momentum there. You can see here it started ranging. All of a sudden the bears tried to kick in. Bears kicked in. Did it hit take profit or we stopped out? Let's see. Obviously for us, we had already booked 2 hour and we were already out of the trade. But you can see the momentum or the trend is kind of changing. We had these lows, we had a high, and then we had a low, and then we had a lower high. So that means the trend is kind of bearish right now. So if I was still holding this trade, I would have closed it once I see this break or change of character right here. But will the trend change back to bullish and hit take profit, or will it keep on going lower and stop at break even? So some things you just need to always consider. Okay, so you see some kind of bullish momentum is kicking in. You just need to sometimes be considering the price trend and see how it's playing out for you to actually maximize your gains and know how prices are playing out. So you see here, prices created an even lower low, and it looks like it's creating a lower high again. So yeah, at this point, I don't think if I would still be holding, because this is just a ranging market, I would have closed the trade. Like for me, I don't like holding trades for too long. I just realized, okay, so here prices were approaching our take profit and they might tap it. They might tap it. Okay, take profit was hit, right? But how long did it take to hit take profit? So you took the trade on January 15th, the trade you held it all the way until January 22nd. I don't do that. I'm no longer a swing trader. Post-COVID, I realized like swing trading has very low profitability rate. So I just stopped doing that. I stopped being a swing trader and I'm focusing much more on day trading. So that means I'll have exited the trade way past all this drama. Federico, you're saying you want to ask something. Can I go down a bit? Can I go down a bit? I'm not sure I understand what you're referring for. Down a bit. I'm not sure I understand that. What candlestick did you use for the entry for that trade? So the candlestick that I used, JJ, was on the 15 minutes. Was on the 15 minutes. Let me rewind back. It was this candlestick right here. This is the candlestick that I used for my entry. I considered it to be a entry candlestick because of this bullish momentum that had just been shown here, and this bearish candlestick didn't fully engulf this bullish candle. So I was like, okay, this is an inside candle, but the momentum is in favor of the bulls. So I took a risky trade there, short it, and it gave us a beautiful 2 hour. So 15 minutes, we are back here, Federico. What did you want to ask? A bit more back. Okay. Here. Okay. The trend line. You can actually unmute yourself because I think with texting it will take much longer. You can just unmute yourself and so that you can actually talk. I wanted to see. You wanted to see if the trend was nice. Okay, cool. So yeah, you can see here the trend actually already changed. So prices created, you know, a higher low, same high, higher low, and then prices created a higher high. So the trend had changed if it was valid. Okay. All right. So thus far, that's how we would have gotten the trades. Okay. So I think we need to increase our pace because we're actually still just on the, we are still in June and we're about 1 hour down. We need to increase our pace. So obviously, and you can see the momentum here. This is from the 1 hour. You can always read the momentum. You can see here the momentum is bullish. Like prices are creating higher highs and higher lows. So obviously in a scenario or a market structure like this, what trading opportunities do you need to be looking for? Obviously, buy trading opportunities because the trend is bullish. Why would you be looking for sell opportunities? It's buy trades only. Look at the sells. The sells are very choppy and they're not even really going very far. Look at this. Look at this. Look at these. Like, these are the retracements. These are the selling opportunities. Very choppy. So you can see when you trade against the trend, it's very hard for you to actually get to decent trades because of this way the market is always set up on the counter trend. But if you trade with the trend, you can see how beautiful the pushes are. strong bullish pushes. So okay, so far we're already in 22nd. We had another trade on the 27th. So currently we will still be looking for buying opportunities as the trend is bullish. We can switch that up to the daily and see how the daily was reacting. So on the daily, okay, it looks like prices were on this trend line here. But still bullish. Okay, so bearish candles kicked in crazy. Bearish candles kicked in crazy, closing below this low, indicating some kind of a reversal so that you can actually look for a selling opportunity because prices have broken below this low. So let's see how it plays out. Back above. Oof. Prices are now pushing lower with a strong, crazy momentum. So obviously, as I said again, so if we see this on the lower time frames, let's see how it would have been. You can see here prices pushed higher, pushed lower, pushed back up, and then prices was looking to keep on pushing lower. I would be looking for possibly a sell if prices broke and gave me a retest on this structure here. Okay. Okay. So prices began to be very choppy. Now that candlestick, I would have been interested in. Because it indicates some kind of a strong bearish push, strong bearish momentum. So now the only structure that would have been holding these prices would have been somewhere here. I'd cover it like that. So this would no longer be valid. I wouldn't really consider this structure. I'll just be looking at the prices like this and seeing how it plays out. So if prices break above here, I'll be looking for some kind of buys. If prices break below here, I'll be looking for sells. Prices are on a structure, lost momentum, came back up, rejected from the structure. Now on the trend line, looks like they're being rejected. Fake out. No, broke above. Okay. So prices have now broken above. We will be looking for buying opportunities. Should we get a retest? Okay, so prices pushed all the way past our target without giving us as something simple as a retest. Okay, so prices are now very, very bullish. Prices are now very, very bullish. From the daily perspective, prices have broken above this high and they are creating high highs. Okay, so the structure was somewhere here. That's the most recent structure. Prices broke above that. So currently, we are now on July 13th. And prices look like they're very bullish. Crazy bullish. So if you look on the 4 hours here, back on this backtesting thing, I was actually considering this. So obviously here we didn't take a trade. The last trade we took was on June 27th. So here on July we didn't take any trade. But if you look at this structure here, you can notice that prices did break above and gave us a retest and then gave us a bullish railing candlestick. This is the 4 hour. And once prices were here, how's the daily looking? So once prices were here, how's the daily looking? Okay, so the daily was some kind of a doji, so yeah, maybe I wouldn't take, that's why I think I didn't take the trade, because the daily was some kind of a doji. But if you look at the structure here, the structure was perfectly clear. Like prices were in a range, prices broke above, gave us a retest. So that means the distance from here to here should have been the distance from there to where we should have been aiming our targets. Would it have given us a 1:3? It would have given us a 1:4. So a scenario like this, I think it's something to also learn from. So it doesn't really, sometimes looking at the higher time frames obviously is important, because here we didn't take the trade, I believe, because the daily was indicating some kind of a doji, but here this daily wasn't closed yet. So I'm curious to see how it will actually close. Let me actually play. Jesus. So the daily actually closed a doji. So I wouldn't have considered taking a trade from the daily candlestick like that. But we should have also considered this daily trend. We had a low, we had a high, we had a higher low, we had a lower high. This being prices actually broke. See that? Prices actually broke above this kind of trend. Like we had this high, we had this low, and then prices broke above that trend. So that should have been some kind of a indication that prices have a higher probability of pushing higher. I don't know why we missed that, because the trade would have still pushed and ended still here on this zone. So it would have been a risky trade, but the prices would still be in the playing range of the next market structure. So we would have been safe. And obviously, so this trade here, it was worth taking. We didn't take it, believing maybe prices would reverse. So we were actually just guided by the, what can I say, predictions. Instead of just anticipating and following the market, what it's doing, we started predicting the market, and we missed on a beautiful opportunity like this one here. So we should have taken this trade, and obviously the way it played out was just beautiful. Look at it dance. Take profits would have been hit smoothly, but we didn't take this trade. So that's something to learn from. We sometimes need to always just be focusing. You can see this trend, like prices broke above this trend beautifully, broke and gave us a retest with a beautiful confirmation, like beautiful. So the daily, we need to focus more on the trend rather than the candlestick formation, if you will. Like for instance, in this particular scenario here, it would have given us a beautiful trade that we missed. But here, we live and we learn, right? So yeah, that's something I think we need to be focusing on next in the future. Here we have another structure. Prices broke past that. So prices are pushing higher, higher, and higher. Okay, now they're coming down. This is the 4-hour. So that means if we switched to the daily, prices will most probably be ranging, and our prices on a structure. Because if prices are on a structure and they're indicating all of those dojis, that indicates there's a very high probability that prices will reverse. So you can see here prices were kind of in a structure here, as there was rejection there. So that means here we should be looking for the 4 hours to look for some kind of bearish retracement for prices to swing until it reaches somewhere here. So let's see how it plays out. Will we get an opportunity? Okay, so that, okay, prices pushed lower with a strong bearish momentum and then closed back up. We're just waiting for a bullish, a bearish candlestick. Okay, so now prices are still forming bearish. Now look at this on the 1 hour. On the 1 hour, you can actually see that range. Okay, so for us to take a trade, prices will have to break this structure here, give us a retest and push lower, because we are anticipating to see prices retrace until they reach here, because they are on a daily ranging. That means they don't have the momentum to break, and the possible place to look for more bullish buys are somewhere here. So that's where we'll be anticipating to see prices go, but we won't be taking a trade until prices break below here, as that will have confirmed that the bears are now stronger than the bulls. Other than that, prices are just ranging. Okay, so that was a false out. Okay, Jesus, hold on. Okay, so we have a break, ladies and gentlemen. So we have a break. We can go on the lower time frames and look for possible entries. So the 1 hour was very aggressive, so taking an entry on the 1 hour would be some kind of a so where should we be anticipating to see prices retrace to? So I'll consider this part here as where prices should be retracing to. Okay, so let's see. Jesus. Okay, so what the, okay, so prices did take off again without giving us a proper retest. So here prices did retrace to this kind of wick, but it's not where I wanted it to reach. And then this candlestick that was prior to this crazy bearish candlestick wasn't a solid bearish confirmation candlestick, so I couldn't pull the trigger here, right? I couldn't, otherwise it would have been an aggressive move. Okay, so you see prices are now, they have reached our structure, ladies and gentlemen. So we're just, okay, hold on. So this bearish candle right here, we would have considered for it to be our entry candlestick, or should have. Let me see, when was this? If we actually took this trade, I don't think we did, because look at the time. The time is about 2300 hours, and that's 1 hour to midnight my time, and that's the time that New York closes. So I don't think we would have taken this trade, but it was a beautiful opportunity. In this scenario, we would have said we have room to improve, but in this type of scenario, we wouldn't have done anything, because that's my bedtime. Like, that's 11 in the evening. I'm not sitting in the charts at 11 in the evening. That's 1 hour to midnight. But had we considered that, it would have given us a 1:18. 1:18 to where take profit should have been. Crazy gains. Let's see if it will play out. 1:18. Jesus. So first, let us see. 1:18. Okay, let's zoom in and see if it actually gave us, or it will actually give us what we're anticipating. So we were risking about 6 pips. So that means once prices reach somewhere here, we should have been break even. Okay, so we would have been break even by then. and stopped at break even. Okay, so this would have been a break-even trade. We wouldn't have even gone far with it. So yeah, anyways, it was a decent risk to reward. It was worth risking it. So you can see how prices are actually reacting to how prices are playing around in the Asian session, because right now it's the Asian session. The Asian session, there is no euro or US dollar transactions. Most of them are institution traders that trade in that time, are somewhere in bed or doing whatever they know, but nobody's trading at that time. So obviously now the market is being moved by Asian session. I think this momentum is the London. Yeah, the London just kicked in. You can notice the momentum change. So the momentum change right there. So that didn't give us a proper entry. So prices did break above this trend line. Let's see if it will keep on being bullish or prices will reverse back, break below, and be bearish again. Because if they give us a bullish confirmation here, we're looking for buys. But if they break below here, we are continuing with sells. Oof, prices broke below. Okay, now they are dancing around in the structure. Hold on. So prices did break below back. Prices did break below here. Could we have gotten an entry? Because that's the thing we need to, like, in a scenario like this, how could we have gotten this move to be, in our favor so that we can actually take advantage of it? So the structure is here, hasn't changed. The zone was somewhere there. If we zoom in, this is 30 minutes. How could we have taken advantage of this? Could we have considered this as a break and this as a retest? For me, I really wouldn't, because it also did the same before and then prices just came back. So I really wouldn't have considered that as a structure, though prices did break below here. Maybe on the 15, that's the 5. Maybe on the 15. Okay, so we didn't even have a retest here. So maybe if we get a retest here, then I may consider taking the trade. But before that, that would have been an impulsive entry. Okay, so we're looking at some kind of retest. Do we have a new market structure somewhere here? No, we don't have a structure there. Here we don't have a structure. So, okay, so this move looks like we couldn't have taken advantage of it. We couldn't have taken advantage of it. Because this candle right here, it would have been an aggressive move though. If we were to take advantage of this, this would have been an aggressive entry, because you see this right here, it was just about the New York Open. So if you saw this, it was some kind of a range, but the difference with this candlestick here is that it actually closed below this zone. But we don't trade breakout trades. But for those that do trade breakouts, this would have been your entry candlestick. So for me, I would have still been waiting for a retracement. But for those that do trade breakouts, this would have been your thing. This would have been your entry right here. And prices pushing lower, crazy momentum. 30 minutes. Okay, so this is the 1 hour again. So now the structure on the 1 hour is now this one right here. Prices are ranging a lot. How was it looking on the daily? So on the daily, it looks like prices were closing with a doji. So that means it was a pump and then some kind of a doji losing momentum. But at the end of the day, do you see, for instance, here, that anticipation, we understood like prices would push lower. So no, like we should have gotten a sell opportunity here, because if we look at the daily, this would have indicated for us to actually look for a sell. Okay, so that's the reason we're doing backtest. We're looking to improve our strategy. If we can't see a sell opportunity and the market is actually indicating from the daily that there are sells going to be made, we need to improve on something. We need to improve on something. Okay, so that's the daily. Okay, what can we do on the 4 hours that will actually... Okay, so let's remove these. So here we see prices were ranging. They did break below and then pushed back up, creating a lower low, and then this candle right here. So I think this 4 hour here, this is what we should have been using as our entry, as our confirmation, because the trend from the daily is indicating that the prices didn't have momentum. They are looking to push lower. So this was the confirmation from the daily. It's looking to push lower, right? And the momentum is valid, it's bearish. So we need to be looking for a sell opportunity. On the 4 hours, prices were ranging, broke below this structure, created a lower high, and then formed this bearish candlestick. So obviously this should have been used as our confirmation candlestick. And then after this, that's when we should have been looking for entries on the 1 hour past 12. So that means 12. So from here, from 12 here, we should have been looking for some kind of an entry. Okay, so now where would we have been looking for an entry? Because, okay, the trend is bearish from the daily 4 hours. This is the 1 hour. Where should we have been looking for entries? Okay, so we have a structure here. Prices didn't respect that, broke above that. If we extend it, obviously it's a weak structure, but does it give us? No, it doesn't. Okay, so you come back here. Once we pull back here, because this is a sensitive zone, how is it respected? If I put it like that, it might be some kind of forcing a trade. No. Okay, so this candle right here, this on the 1300, like, because the 4 hour closed, or this 4 hour opened at 1200 hours, right? So that means this should have been our trigger candlestick. But how could we have validated us taking this trade here? Because the structure here, if we extend it, it just passes through that. It doesn't really validate our entry. On the 13, this is the 30 minutes. On the 30 minutes. So on the 30 minutes, because the structure would have been looking something like this. If you look at the path on the left here, respected here, prices broke, came back here, tried to reject, pushed back lower, gave us a retest. Okay, so this was the rejection at 1300 hours. But I wouldn't have taken the trade here because of this low. So, right. Now, you remember last time again I said if you're an aggressive trader, this would have been your entry. So even for us, the break and retest traders, this should have been our entry. The reason for that is because we already had a retest. We are just looking for more confirmations. You see, these prices came back here, was rejected, and then broke below, retested. You see this is a break and a retest. And then here, this was the extension. But we were not sure if prices will keep on pushing lower because prices here had a low, right? So that means this here right here was our retest, but this was our entry confirmation. So that means this should have also been our entry candlestick. So, okay. So next time we approach a similar scenario like this, we need to be taking our entries somewhere like here. After prices give us a retest, or once we already see all the indications from the daily time frame that prices will have a high probability pushing lower. Because the higher the time frame, the bigger the chances for you to take that, or the bigger the chances for your probability of the trade to play out. Now, if we already have this daily indicating that the bulls don't have momentum, and the bears are the one in control, so that means if you go in the lower time frames, the trend has changed and it has given us a confirmation. Like this here should have been a no-brainer, because we should have just taken the trade, because daily supports us, 4 hours supports us, and the trend supports us. And then here we should have just been taking the entries, right? So this would have been, I wouldn't have considered it such as a break trade, but I would have considered it, this is a break and retest, and this was just the confirmation. So that's how I'll approach it next time, right? So once we have that daily confirmation, that daily perspective that already supports our trend, we need to go on the lower time frames and look for the best possible places to take our entries. And sometimes they may not be picture perfect the way we expect them to be. Sometimes they may be a little choppy, something like this. But I think we need to take advantage of such scenarios like this. So this was obviously on the Thursday of July 20th, and we didn't take a trade on Eurusd on here. So we should have taken advantage of it. Let's see how it would have played out. So that means we should have taken a short here. Stops obviously above the entry candlestick. How many pips would we have been risking? About 13. So that means once prices reach somewhere here, we should have been break even, weren't stopped out. Okay, so that means at about 3R, prices would still have that crazy momentum. I would have held the trade. Once it reached 4R, how would it have been behaving? So once it reached 4R, you can see here prices closed with some kind of a doji. I think I would have closed the trade, because a doji all the time indicates as a lack of momentum. So once prices closed with this doji here, just as the prices closed, I would have closed the trade, because it would have been indicating a lack of momentum, and I wouldn't want to stay in that trade. So I would have closed the trade at about 3.5R. So that's how we should have taken advantage of this trade, taken advantage of this move that we had already anticipated days before. So next time we're in a scenario like this, we need to take advantage of such moves. So Eurusd, yeah, we didn't see this opportunity. No, we did see it, but we didn't take advantage of it. So next time we need to do something like that, because prices just closed below this low. That is something we should have taken advantage of. Now, back to the daily. Let's see how prices will play out here. Okay, prices closed with the doji. Bullish, bearish, crazy. The momentum shift, you see that? So we had a low, we had a high, higher low, higher high. Now the trend is bullish, but the candlesticks are crazy bearish. Bullish again. Okay, so once this happened, I think there's a change in trend. So obviously this is a morning star. Morning star is obviously an indication for the bulls to take control, and I think we should have been looking for some kind of a buy there on the 4 hours. Possibly looking for entries there. Oof, prices pushed past that like it's nothing. Okay, so kind of a range. Okay, so prices are now back bullish. Because this was the most recent high, prices passed that high, creating a higher high. So let's see. Okay, prices came back down. Like, where are we now? We're in August. Like August, look at this range. August has been the worst month amongst these 3 trading months. Like, look at this. Okay, so now prices look like they're creating some kind of a bearish move. Retest there. Okay, August for me really wasn't really that. I didn't really find a lot of trading opportunities. As I said earlier, like I only found 3 trading opportunities in August, and 2 of them hit SL and 1 of them hit break even. Like August for me just wasn't it. Now, I think the reason is that even when you look at here, since August began, 1st of August was here, prices started with a doji, and then look at that. Prices creating a morning star, and then reversing, creating an evening star, and then creating again some kind of a, I don't know what this is. This is a pin, right? So that means an inside candle and then a pin. Like it's giving you multiple false signals. Here you had a morning star. In a normal market, once you get a morning star, prices continue pushing higher. But then no, prices turned bearish, giving us an evening star. After an evening star, after that, what happened? Prices again became bullish, right? A pin, and then prices dropped. But look at all of these weeks. So that means on the lower time frames, these are not just normal healthy trends. They are choppy trends. So that means it's very easy for you to get stopped out. These are characteristics of low volume markets. Choppy markets. So, but obviously, once prices broke below here, kind of a break and retest. So after break and retest, where do you actually aim for? You aim for possibly the next market structure, which would have been somewhere here. Let's see if prices would have given us an entry to take advantage of that. So that means if we go on the 4 hours, we need to have been looking for some kind of a sell opportunity, right? So that means this was the high. This was the low. We're looking for a break, retest, for possibly prices to push until they reach maybe somewhere there. Okay, Jesus. Oof, what's going on now? Insane moves. Like, okay, so prices did break below. I wouldn't consider this as a retest, but prices indicated some kind of a bearish continuation after that. So that means on the 30, after this retest or whatever, we should have been looking for some kind of a continuation trend. So which would have been somewhere maybe after this change of character, because this was the most recent low. Prices broke, gave us a retest. Okay, so that would have been our entry. Again, we didn't take advantage of this trade in our trading. So maybe we aim for 1:3. No, where's the target? the target was somewhere here. It would have given us 1:6. However, if you look at the structure here, you can see prices on 16 pips, and then here we have 16 pips once they reach here. So that means we would have been a break even, and then prices reversed, so we would have been stopped out at break even. So this trade would have been a break even trade. However, prices broke below this structure, so if we get a retest here, we might be looking for a continuation for prices to push until where we were actually heading. Will we get a retest? Okay, prices have retested the structure, broke above it. So look at these false outs. Like, it's crazy how when prices or when the markets have low volume, the way they react. Look at all these weeks. Like, what's this? Obviously this was most probably fundamentally influenced, but it's crazy how they always have these crazy weeks. Yeah, definitely this was fundamentally influenced. So prices are now again dancing here, just below the structure, kind of ranging. I wouldn't be taking a trade here. Very low momentum. Prices broke about that. So prices are still ranging. As of now, prices are still ranging. They really don't still have that momentum that I'll be looking for to take a trade. And I think prices have a very high possibility to keep on ranging until next month. That's just what I think, because it's very few people that will be working this last week of the summer. Very few, very small volume. So I don't know. I doubt if prices will actually trend before next month comes, but those are just my views, right? Those are just my views. So yeah, so that's the back test of EURUSD. Obviously we didn't really get a lot of trades because I didn't really want to go into that much detail on the lower time frames, just so that we can actually save time. But what I've picked up is that I think we need to focus more on the daily time frame. Once it indicates a certain directional bias, once we go on the lower time frames such as the 4-hour and we get our confirmation on the entries, we shouldn't really be trying to overthink it, because we already have a bias on the daily, like the EURUSD example that we just saw. If we have a bias that's confirmed on the daily and the 4 hours, it's very unlikely that it will go against us if we take an entry on the lower time frames. So we just need to always be focusing on the daily time frame, 4 hours, for the bias on the daily and the confirmation of the 4 hour. And then on the entries, if we take even an aggressive entry, it's not so bad as long as it's confirmed on the daily and the 4 hours, because the higher time frames will push the lower time frames more times than the lower time frames will actually change against the higher time frames. So the odds in the long run will still be in our favor. That's something that I've picked up on our today's backtesting that we should improve on, and will actually make us better and stronger traders in the future. Thus, the backtest. Voila. It depends on what aspect are you saying I'm more profitable this year than last year. Because last year I also had some crazy running months. Like July last year I had over 20% win rate. Was it July? I think it was July. Was the most profitable month of the year. This year so far it's May. May this year I made over 21%, but July last year I made 29. So I think in the profitability, last year is still better. Last year is still better. But hopefully, as we know, September is also one of the most volatile months. So I'm hoping that yeah, September is always one of the most volatile months. So I hope next month we'll have some good winning trades, get our numbers back to double digits. I missed the profits of double digits, man. I missed them. So hopefully next month we'll have another beautiful another beautiful month. So yeah. You will, JJ, don't worry. So with that being said, guys, thank you for your time. Thank you for showing up. Don't worry, JJ, I got you. Next tomorrow we'll be analyzing another pair. Now this time I'll try to focus more from the daily to the lower time frame so that we can actually see what we can improve from there and see the maximum number of trades that we can actually capture. Because for instance, just on this back test, we caught barely 3-5 trades, but on our own trading, we caught over 13 trades. We caught 13 trades with a 69% win rate. So that means this back test, we are doing it a little bit too fast. That's why we are not actually maximizing all of the trades that we can possibly catch. But obviously, at least we see some things to improve, because it's not a back test if you can't really spot what went wrong, what you did wrong, or how you can improve. So it's that aspect of back testing that actually helps us to become better traders. Where do we improve and how do we improve? And I'm glad that we actually caught that in today's back test. So I appreciate your time. Thank you for joining me in today's back test. I'll see you guys again tomorrow, same time, same place. All right, everybody. See you. Don't worry, Federico. See you guys.